It's Friday, March 6th, and you're about to go on the markets with Fermata Advisors and our private wealth brand, Sonoma Wealth Advisors. My name is Dano Weir, and the headline this week, the main story in the market, is the main story in the world, which is military activity in the Middle East. And the idea that perhaps the oil market's new. What impact did that have on portfolios? How did different asset classes react to Middle East action this week? It's time to find out right now on the markets.
The stock market, the economy, your money. What's the latest and what could be next? Find out now with Fermata on the markets. Straightforward financial market updates for the brands of Fermata Advisors, Sonoma Wealth Advisors, Fermata 401k, and Fermata Tax. On the Markets starts now.
Managing principal of the firm, co-host of the show with me, Daren Blonski, and Chris Sipes on assignment this week. He will return next week. Daren, it's one of those weeks on the show where, we're not a political show. We don't take sides, and we don't really come in with that perspective. But sometimes there are some stories which are just so big that that's the narrative, and it really does impact the market, and that's the case this week.
Yeah, that's for real. Obviously, you can't ignore bombs getting dropped in Iran, and then Iran fighting back, or at least trying, and all that has caused, and the chaos that's caused in the oil markets, which, hey, Dan, I think in the show last week we said, looks like it's going to go. And sure enough, Saturday morning, here we roll.
Yep. Right after the market closes. So just want to say up front this week, when stuff like this happens, there truly are. There's some innocent people dying. There are Americans dying. And we have no idea where this is going to go. Our perspective on this is we have to talk about things which are impacting the market. That's our focus. So we are going to maintain focus on the markets. And Daren, the focus of the title of this show, the oil market's new. So can you show me how you're seeing in the analytics and the technicals of the market that the oil market perhaps predicted that this was going to happen?
So we talked last week about this building momentum. You can see this red line, how it went up right before we saw things really start shooting up in Russia. If you go back to 2022 and heating up, obviously Russia's a big oil producer. And so when a war breaks out between Russia and Ukraine, that's going to drive the price of oil. Because oil is the foundation of so many things economically, it's pretty difficult to sustain a long-term high cost of oil without creating a lot of other economic issues, including the cost of us driving our cars around. Some are saying that the gas is going to go to $8 in California. Lucky us. Our gas politics are really interesting, actually. If you ever want to go down a rabbit hole of nonsense, dig into our gas politics and where we get our gas from, why we get our gas, where we get our gas from. And it's pretty insane. What's really interesting about it is it's highly inefficient and environmentally creates so many more toxins in the environment just because some of the laws that force us to ship our oil further than we would have to get it into the state because of some of the laws. But anyway, who's going there? Because we're not a political show, but it's pretty interesting. So
when you're the managing principal of the firm, you get to stray across the lines a little bit.
Just a tiptoe or two, though, because in reality, we try to be unbiased. We think markets don't care about our politics; they don't care about your politics, and markets do what markets do. So when we looked at the chart last week, you could see this 20-period moving average, and you could see this growing. This is a bull flag. I think we pointed this out a few weeks ago that there's this bull flag right here that suggested it was going higher. I pointed out that last week that this was another bull flag. And then sure enough, Saturday morning, we broke out and things started ripping. We've seen in recent weeks kind of things calm down by the weekend but it was really clear once this thing started going that it wasn't going to calm down that fast. I'm hearing September that's going to calm down. For those who were under a rock and not paying attention this week, last Saturday we dropped a bomb We dropped, actually, I think it was 30 bombs on pretty much all of the leadership of Iran and killed them all. And there's just a few left. And I believe they're hunting them as fast as they can reappoint them in Iran. Which, hey, not going to get in the politics of that, the right, the wrong of it. That's the reality. Way above my pay grade. What that creates in the markets, though, is it just creates this uncertainty, right? Like what's going to happen next. Because so much of the oil comes out of Iran and the strait that Iran has, it's really all about that. So if we look at a map of the world and we look at the kind of the choke point, and this has been the issue for so long.
Do you have that on another screen?
I will in just a sec. I'm just pulling it up here. In the Strait of Hormuz is it's a choke point for oil. I am not an oil expert. I study enough of this stuff to try to understand it from a market standpoint, because I kind of don't like when everyone's an expert on everything, and that's not the goal here. But just I do follow a lot of geopolitics. I listen to a lot of stuff on what's going on. But basically, so this is the country of Iran. This is the Strait of Hormuz. Something like 50% of the world oil goes through here, right? Because Bahrain, Qatar, Saudi Arabia, Kuwait, Iran, they're all shipping oil through here. And so after we bombed Iran last week, the IRGC said, we're going to try and shut this thing off. It's not particularly ideal for China, because China in particular gets a lot of oil through there. From what I can tell, reading through the headlines, is it's for the most part staying open. There have been some oil boats that have gotten smoked in the last couple of days, but it looks to me like things are generally moving there, even though there's a war going on. We also went out and literally decimated the entire Iranian Navy. And there's a picture online. I don't know if you saw that, which is sad too, all at the same time. But we sunk a boat with a torpedo from a submarine for the first time since World War II.
I did see that.
And that was, it was just mind-boggling to watch that thing get hit. But so been pretty intense week. But all that to say is, lots of theories about that. But given that in recent weeks, we were down here in Venezuela doing regime change, taking over the oil coming out of Venezuela, part of the argument is what the U.S. is trying to do geopolitically is isolate China. And by taking Venezuelan oil, which was getting shipped to China, and now by knocking out, and I think the hope is that they can control Iran oil, that leaves really Russia. And we're in the mix of telling China what oil they can and can't have. How long China puts up with that and to what degree they push back, I guess we'll see. I did notice Secretary Bessent before we came on today said, we're going to take off all the sanctions on Russian oil, which is shocking to hear him say that. Well, why? Right. Because go back to the charts, right? And we go back to the charts and you can tell geopolitically, it's not very popular if you have more than $92 or $92 per barrel cost of oil going on. This was the Russian crisis, and now we came up into resistance, which I will say that it looks like we're on an uptrend, but this could calm down really quick the way it moves. And you've heard me say this many times on this show. If it moves fast in one direction, it moves fast in the other direction. So I would actually argue for, at the moment at least, how fast oil has gone up, that there could be a pretty quick move back down, meaning things could settle down quicker than people expect. Right now, what I'm hearing is September before we're done doing what we're doing there. But really all we have to do is take control of the Strait of Hormuz, which won't be easy, and then let the oil flow again, and that brings the price back down. I'm sure both the Democrats and the Republicans don't want to go into their reelection campaigns with oil above $100 a barrel. That would be problematic.
You call that like rubber band momentum, right? Where
you
pull it up that high, it's bound to snap back.
Yeah, it doesn't tend to hold.
Somewhat. Yeah.
Yeah. And you can see that, like, initially we had this big reaction when Russia invaded Ukraine, and then it came back down in, right? So what I would expect right now, and we'll see if this builds, if it's going to be a longer, prolonged kind of thing, I think we'll see some kind of news in the next week with it. Then, oil comes back down and it will find resist or support right there about $78 a barrel. And that's where you would see it kind of hang out somewhere in that zone. I think 78 is kind of where it'll find base support. If it does find base support there, then I think, long term, we're going to be looking at more expensive oil per barrel.
So then you would think common sense would tell you, Daren, that, okay, so there's a war now that's just started. We've got a shock in the oil market. People are going to flee to safety. Where have they been fleeing already? Gold, silver. So the smart money, the smart thinking would say, wow, it's going to be a great week in gold and silver. Was it?
Well, no, I think a lot of there's a term called priced in. I think the market really clearly saw that this was happening and it was already kind of priced in. We saw this big move in gold. And I think we mentioned on this show that like, wow, this is crazy. What's going on? But maybe the market foresaw this coming, right? Because if you think of like the market is just this collective brain trust, and companies were buying gold because they felt, in countries and people, because they felt like there was less security in the world coming. And we've been talking too about the fourth turning, the idea, the concept of the fourth turning, the idea that when you have a multipolar world and not a unipolar world where U.S. is in charge of everything, but now we have a multipolar world where there's this foe of China that is trying to express power throughout the world, and we're now fighting back against that expression of power. That creates more uncertainty, that creates conflicts. So in a way, I think Iran is more about a proxy war with China. I think Venezuela is more about a proxy war with China. I think what's going on in Russia, and I think Russia's the next to fall if everything calms down. I also think Cuba's on its way out as well. And I think Trump mentioned that today, that he's basically, we're going to deal with Iran and then we're going to deal with Cuba. But it makes sense when you think of geopolitically. If you're trying to isolate China, you control the oil, then they have a lot less pull around the world. And I think one of the things that every country's kind of waking up to this week is that Russia and China, while they said, oh, we're going to back you, we're going to help you, we're going to support you, we're going to fund your military, because they've funded a ton of the Iranian military in exchange for their cheap oil, their sanctioned cheap oil. But they didn't show up this week. And I think any country in the world has to step back and go, wait, who am I partnering with here? So I actually think the U.S. got quite a bit more powerful this week now that Iran is, at very least, highly destabilized and likely thrown back tens of 20 of years as far as rebuilding their military, their government infrastructure. You just can't eviscerate all these top leaders and not lose some institutional knowledge that sets back the institution.
And for those who are, in case you're not following, proxy war, meaning, Ukraine was a proxy war in a way between the United States and Russia, in that, Russia and American war head on each other's soil, too significant, too much at risk, too many big guns to play. So Russia, goes after someone who they can more easily attack. And we don't necessarily go over there and fight, but we certainly send enough money to the Ukraine. So therefore, by proxy, we're ostensibly having a war between the two. And that would be the case potentially right now between Russia, China, the U.S., in Iran.
Yeah, and you'll hear this term. I just saw it hit the headlines a few minutes ago, but you'll hear this term "boots on the ground," right? And it's just politically intolerable, for leaders to put people, humans, in that vote for them in danger's way, right? And so there's a lot less tolerance when people start dying. That becomes a bigger issue. That's much why you've seen President Putin in Russia, or dictator Putin, however you want to put it. He has spent a lot of energy bringing in like North Koreans to fight the Russian-Ukrainian war, but he's not pulling young 20-somethings out of St. Petersburg to go get shot at. He's pulling people out of very far off places because that's more tolerable from a political support standpoint. Right. So Trump has to walk this fine line of like, hey, yeah, it's one thing just to drop a bunch of bombs and people are disconnected from the war. But if all of a sudden a bunch of American young adults start returning in coffins, that changes the calculus very quickly, and whether or not Americans really want to fight this war, because it's not really that popular when you look at the polls. So
What
it
about
does
silver?
impact. Go ahead.
What about silver?
Well, so let's go silver sec. So gold, very likely priced it in, but when you look at the daily charts, like, yeah, the week started off and it went up, but then it sold off, right? So that's interesting in itself. I would also say that gold is on a downward trend, right? They don't tell you that in the news. You could also argue it's also on a long-term bull flag too. So you could say it's going to break out. So, but right now we're making lower lows. And so you have to accept a medium to short-term downtrend in gold. What I would be watching is really kind of this 5,400 an ounce level, and whether or not that holds tight. If it breaks out above that, then I think we probably go higher. But the fact that this 20-period moving average, it's hanging on right here to this red line, and now it's right up here. And you can see what that looks like in the S&P 500, where we lost that 20-period moving average right here, and you can see we're trading below it. So the trend is down in the S&P 500, which is the largest US based stocks. You can see lower lows happening, or lower highs, excuse me. But we're coming in contact with this 200-day moving average. So for those feeling a little nervous about their portfolios in the market, I would sit back, enjoy your weekend. It's beautiful out. And not trip about it, because right now we're just doing it in corrective phase. It would not even be shocking to see this just trade right down into this area and then find support. If we go below that 200-period moving average, last time we went below that was back in the tariff panic right here. We go below that, then maybe we got something different. But right now it's just short-term volatility. Stay the course. Don't be getting too jumpy in your portfolio. Listen to the news if you want to listen to the news, but just realize it's designed to scare your eyeballs off. And so you look at it more. And that's all it is. But you should not be connecting the news with your portfolio. That is a recipe for disaster when it comes to investing.
I wonder why there's so many prescription drug ads in between the network news segments.
Yeah, exactly. Weren't we going to cancel those or something? When they're I felt like RFK was going to say they're illegal now or something.
He'll get that done right after his next jeans workout.
Yeah, there you go.
What about, so we've got this military activity, and we have a stock that has had a rough go so far this year, and now seemingly a major bounce that makes a lot of sense. Tell me about Palantir this week.
Let me pause that. I'll go there in just a sec. Let me just touch on the S&P to wrap that a little bit. So this is the S&P 500. We've talked last week a lot about how these value stocks really took off and have been doing really well. So there's also another narrative. They're not going to tell you in the news like, hey, value stocks have just done really good. They're taking a pause and a breather. And oh, look and behold, the Microsoft, all these Palantir type companies that were ripping the last 3 years are now going back up a little bit. But yeah, a lot of the value stocks have had an incredible year so far. They had a bad week. And you can see that in the RSP here, where the RSP went down. This was the leader for the year. And now we're basically back to where we were at the start of the year. I think we touched that point today, because you can see this was the start of the year right here. And we're back at 196. So, the point is just that when things get spicy, you see these corrections. The market finds a reason to sell off a little bit, but it's not a good strategy to hit your panic buttons. You do have the beginning of perhaps a corrective phase in the markets. Wouldn't be shocking. It was an okay beginning of the year. We get through February, March, April, May. We see some weakness. Seasonal weakness is not a shocker. Markets don't just go up; they bounce up and down and to the right. Now let's talk about Palantir. So Palantir, dude, I saw so many memes this week about, all these Ayatollahs going, what does Palantir actually do? And Palantir made this massive bounce. And for those who don't know, Palantir is supposedly a company that does AI and is, in all the government systems. It's one of Peter Thiel's babies. Peter Thiel is also responsible for putting JD Vance in the position he's in, apparently. Very influential in the current administration. Very kind of controversial figure, but this is one of his companies, and apparently it's just embedded in everything in the government. And the idea is that there's AI and they're already reading everything, which to me is like this whole thing going on in the news about Anthropic being unwilling to let the U.S. government use their LLMs for autonomous weapons. There was the controversy last week, and then OpenAI steps in and says, you can use ours, and then tells the public, well, we're not going to let them use ours. But then they basically are, because Sam Altman pretty much lies and has a long history of everything, of lying to people. But so when you look at a company like Palantir, like what do people really think that AI is not actually already in, like all these drones and defense weapons? It absolutely is. So it's just kind of a stupid playing out in the media. Anyway, Palantir did bounce this week. It found a triple bottom here a few weeks ago. You can see that triple bottom right there, and it's been working up. But now it went into the 200-day moving average and actually got rejected today. So it's still got to get that through that 200-day moving average before it's going to go on higher to all-time new highs. It did break down on a kind of an ugly triple top, head and shoulders. There's your head and shoulders pattern. Broke down. This was the neckline, went below it. Now that it's regained the neckline, I would look at that fairly bullish. But we still got to get back above that 200-day moving average. But when stocks go down, they don't just go down. They go down, they bounce up. Just like they did it going up, they're going to do the same thing going down. So you'll have days where it does really well, weeks where it really does really well, and then actually things are over. But I would say, we're above that red moving average, which is a trader average. We came into there. We did get rejected, shows short-term weakness. It's got a shorter time frame. But I wouldn't bet against that one yet, actually. I would just stay the course there. So anyway, if you can tell me what Palantir does, that's good.
In my research of it, this is just a guess because nobody really truly knows. But I could imagine that in the intelligence world, you have a ton of documents and signals and creepy things that they're watching. And it would be very hard to coalesce that into bullet points and actions and a lot of different things. And I can imagine that it's a GPT type system that's able to just intake all of that and crunch it out into, this is the bad guy, go get him here, here's his address. And I don't know that for sure, but so I imagine that type of functionality.
Yeah, that's kind of how I looked at it. Like you have a data lake, a government data lake, and then Palantir goes in there and then scrapes the data and makes it make sense. That's my read of what they do, but it's just like super top secret. So nobody knows. Even you go on their website, it's very obtuse. Bitcoin, we've been talking about this being the bottom for Bitcoin. Looked like it was going to go on one of its rips upward and then came back in, but notice it held this 20-period moving average, that red line. So I don't think it's over for Bitcoin yet. We'll see how it goes through the weekend. The Bitcoin is one of those things that trades around the clock 24/7. So, it starts moving before anything else. And when politicians do wild things on the weekend, so they don't punish the markets, Bitcoin's one of those things you can kind of read. And in fact, I had a client reach out to me and said, Daren, I'm really worried about Iran and all this. I'm like, hey, risk assets are still up. Bitcoin's not punishing people too remarkably bad, even through the Iran thing. I would stay the course. We'll see. But right now, it definitely looks like it's got some strength in there.
We always like to talk about, the narrative and then how things react. And it's very logical that in the week that we attack Iran, and it seems like there's been some, quote, military success, however you want to define that Palantir would bounce 15% in the week. That makes a lot of logical sense. It also makes logical sense that Bitcoin, which is the tip of the risk curve, would have done something, would have reacted in an extreme way on the result on news of this action, right? And instead, counterintuitively, it kind of just did nothing. So it's an interesting kind of tale of two assets.
Yeah, I mean, that's the thing with the markets, right? Is like if you think you've got it figured out, you don't. And the market always invites humility. Always invites humility.
Yeah.
And yeah, you would think, oh, we're gonna bomb Iran, all these military companies are gonna go up, and Palantir is gonna go up, and but here's the really sad truth of it, though, Dan, is that war is actually probably pretty good for the market, generally speaking.
Yeah, unfortunately.
It's very stimulative in nature, and that's sad. But that's the truth. And so if you're thinking that you need to run from the markets because of a war, history doesn't really support that approach. Let's talk about 10-year interest rate, right? We had these look like mortgage rates were going down. Then all of a sudden they spiked back up above 6%. You can see the 10-year looked like it was really going lower. It was broken below 4%, and then we ripped up when things started bombing. We started bombing Iran, and we still haven't gone up above that 4.19 zone that I think will be resistance for it. But we're definitely coming into a stronger interest rate. Trump very much wants to get interest rates down before he walks into re-election, and wants to do it within enough time to let people feel good about the market. And there's a lag, right? So if interest rates go down, there's like a 9-month lag. So we're already past that window. But it definitely would help if interest rates went down lower. We're right sitting on that 6% line now. This is the 30-year mortgage. But when I quote it out from other people out in the ecosystem, it's above 6% now, unless you get some points back. Dow Jones Transportation. So let's look at some of like leading indicators. So let me argue to the side of like, hey, market's actually headed down. We're looking at a rougher time in the market. The transportation's got whacked. Lawnmower whacked. This week you had a triple top hit, right? There's your triple top right there. You had neckline right below neckline, broke down, and now we're into support around there on the transportation. Why is that important? Because that's the artery of the economy. Why are they getting whacked? Well, if oil is really going higher, I mean, all these trucking companies, the cost is going up. Anything that moves things around, it's just got more expensive. When we look at IWM, it's definitely been the shining star, the Russell 2000, which are smaller cap stocks with interest rates going up. That's going to give them a haircut. So they're down. And going back to my point earlier, like these value stocks, these stocks that were doing really well for the year got smacked down this week, but then some of the other ones did okay. So you could argue, like with Dow Jones Transportation, IWM going down, SOX going down, which is the semiconductor index. These are some of the leading indicators. We're in trouble. But then when you go to IGV, it's interesting. IGV is like the front end of the risk curve, and it's ripping. It's going up. It looks positive. So I'm not there yet to say, I think the market might be calling a bluff on this one pretty soon, and it might quiet down faster than people think. I think it just depends how much of a regime change the Trump administration's going after and how complicated it gets. But the fact the front end of the risk curve, IGV, is going up, and then you've got Bitcoin actually holding it together, and you don't have gold just going to the moon. I think people have jitters, but I don't think it's as bad as certainly the news wants you to think it is.
From a market perspective. And I think of the tale of two Iraq wars, which is that, the first one was, 100 days? Something like that in 91. And then the second one was a very long war that was not even really a war, just a series of conflicts. So, yeah, it feels like... to me, just having lived through a couple of these as a civilian, certainly, feels like it's going to be either one of those. September doesn't seem likely to me. It seems like May, or it seems like May 2029. This is one of the two, super short or super long to me.
Well, and I think it's like, well, what's the objectives here, right? Like, are they going to go for the break up the whole Iranian country and let the Kurds take over part of it, and then Pakistan take another chunk of it? I think they just want to secure. It's kind of like what we're doing in Venezuela. Like, oh, this guy is being difficult. We'll take him out, and we just need our puppet dictator in place. And I think as soon as they get a puppet dictator in place, they'll be good to go. But yeah, there's the pragmatism in me, right?
Yeah.
Yeah. So overall, things are scary out there. It's pretty bad if you live in Iran. It's pretty bad if you live in Dubai. Pretty bad if you live in Kuwait, Bahrain. It's pretty bad if you have a loved one who's over there in the middle of it. But the market isn't freaking out. That's for sure. Just take a look at NVIDIA. Nothing really meaningful there. I think we close it there, Dan. That's all I got to say to this week.
Daren, thanks for a look at the charts. Thank you for checking out the show, our episode, The Oil Market's New, and why the activity in the oil markets, we were talking about it literally last week, was that in conjunction with some news headlines really indicating that something was going to happen, and something did happen. So we thank you for making it this far in the show. Wherever you found us, whether it's YouTube, Spotify, or Apple Podcasts, please subscribe. You will keep up with us and future episodes of the show. You can also learn more about our firm, book your wealth analysis at sonomawealth.com. If you're new to our firm, if you're one of our clients, we thank you very, very much for making it all the way to the end. We'll see you next week.
You're up to date with Fermata on the markets. Learn about how the Fermata Advisors family of brands can help your family and business in finance. Sonoma Wealth Advisors, a comprehensive, holistic finance solution offering financial planning, asset management, and tax planning. Take our free wealth analysis now at sonomawealth.com. Fermata 401k, business retirement solutions for small and large companies with a fiduciary commitment. Learn more at fermata401k.com. Fermata Tax, personalized tax services for yourself, your family, or your business with an emphasis on efficiency. Find out how at fermatatax.com. If you haven't already, like and subscribe to Fermata on the Markets on YouTube, Spotify, and Apple Podcasts. Fermata on the Markets features human hosts, editors, and voiceover talent. Music by Dr. Delight on Soundstripe, voiceover by Joan Ellaway Nash. Thank you for listening to the very end. We appreciate diligent viewers and listeners. Fermata Advisors LLC is registered as an investment advisor with the SEC and only transacts business in states where it is properly registered or is excluded or exempt from registration requirements. This content was produced by Fermata Advisors LLC, DBA Sonoma Wealth Advisors, DBA Fermata 401k, DBA Fermata Tax. The opinions expressed by Fermata Advisors LLC on this show are their own. Information presented on this program is believed to be factual and up to date, but we do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. Discussions and answers to questions do not involve the rendering of personalized investment advice, but are limited to the dissemination of general information. A professional advisor should be consulted before implementing any of the options presented. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Viewers and listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance.